The New Jersey Bank Marketing Association presents the May 2010 Bank Marketing Seminar held at the Crowne Plaza Hotel in Clark, New Jersey. I'm your host, Steve Lubetkin. In this program, a presentation by Michael Flynn, Area Vice President for the Raddon Financial Group, a marketing consulting firm.
I guess I'm the foreigner in the room here. Coming from Illinois, and basically, you know, Chicago, I had to ask this question because Larry started getting in a little bit of the politics initially about New Jersey State. And I don't know if you guys have ever heard of Rod Blagojevich. and who in this room, raise your hand if you know what the Windy City actually means, Chicago being the Windy City. Does anybody actually know what that really means? It doesn't have to do with the weather. Do you know what that means? Nobody really knows. Yes? Politicians being blowhards. Exactly, politicians being blowhards. That's actually what the Windy City means, although Chicago is very windy. If you're ever on the lakefront of beautiful Chicago, especially during this time. Larry, awesome presentation. And really, he's, I think that macro monitor, that word makes a lot of sense. He is looking at this from a macro perspective. And what I'm going to talk about today really does complement well with his macro perspective, because I took a slightly different look at this as I looked at what this theme is today and what Raddon is really about. I'm going to talk a little bit about Raddon today, but how do you effectively market products and services? Not just do it, but really do it in a way that drives an ROI. Because there are changes in the financial services industry right now where it's no longer about growth for growth's sake. We got to grow profitably. So by being able to do that, you have to do your marketing effectively. So my agenda today, a little bit about me. I won't talk any more about me, but I do want to talk a little bit about RFG. And the reason I want to do that is because it sets the stage for who we are, will lend some credibility to what I'm about to talk about. And I'm going to talk about my research sources. So really, where does some of this research come from? A little bit about segmentation, and not just for segmentation's sake. Larry has some awesome segmentation that we just saw. Again, as I talk about segmentation, I want to make it very tactical for you. Putting it all together, optimizing your insights into strategic plans, and then really being tactical about it. So a little bit about Raddon. We are actually owned by Open Solutions. We're purchased in 2006. Open Solutions is a core banking provider. We've provided research since 1983. Actually, it was started by a man by the name of Gary Raddon that some of you I know have seen present, who's no longer with us today. But all our clients are banks and credit unions. We focus only on the financial institution industry for what we do. And we are very unique in blending analysis, strategy, consulting, really to get to you tactical success. We have a lot of different, I'm going to just skip by this for time. But this pyramid, I want to spend a little bit of time here. At the foundation of everything here, it's a little bit Raddon, but a little bit about the theme, is fact-based intelligence. Larry just gave us a plethora of fact-based intelligence. And that is the core at what Raddon believes in as well. Because using this foundation to drive into analysis and strategy. So you can't just take raw data and come up with a strategic marketing plan. You have to analyze it and come up with strategic recommendations. That's the next stage up. After that, how do you actually tactically execute on that? What are the tools that you can use to actually go to market and market your products and services based on the strategic recommendations that was just approved by your senior VP or by you for this plan for the year? And Raddon, we have solutions that enable you to do so, to get to that tactical success. So, with that, what is effective financial services research? It's fact-based. I just said, so you want to leverage fact-based intelligence to drive some of the strategic recommendations. It's industry focused, so it's around financial services, very similar to what Larry was talking about. And it really does leverage the voice of the customer as well as the behaviors of this customer, of your customers, to enable tactical execution. So if you're going out and you're looking at these sources, always keep in mind whatever channel it is, what other media or what other direct marketing you're going to do, having in mind that the end game is the ROI of what you're going to do. Don't just have intelligence for intelligence sake, but to be able to actually get an ROI off of what you're getting and what you're doing. What isn't it? There are a couple of points I want to make here of what it's not. It's not just from one source. In other words, it's not just a survey. It's not just the database and telling you that. And it's not just the C-suite opinion. You know, how are we thinking? It is not that. It has to be some fact-based intelligence. At Raddon, we do also some primary research and looking out into the industry. And there's words in this slide, so I do apologize, but I want to lay the groundwork that there are some industry challenges right now. We have to, as an industry, focus on core relationships, and I think this ties and validates a lot of what Larry was saying as well. Today, people aren't just looking at, they're shrinking the number of financial services relationships they have. So you have to look at building off to that core. You know, it's not just for growth's sake, right? So we have to be more efficient. Actually meaningful and can be measured over time are becoming more and more important. And lastly, non-interest income and fee income, ouch. Some regulations coming up in the space that could really hurt. So we have to be creative in how we're going to replace some of that fee income, because this is only the first wave of this with the current government and the current what we have in place there today. So with these challenges, how can we actually leverage knowledge and customer intelligence to help us grow and meet these challenges? That's kind of what I want to talk about here today. So again, fact-based intelligence in some of these research sources. Okay, here's a basic approach, the way we like to look at it. There are attitudes of financial services, of how people look at financial services today. We do a lot of primary research on that. Larry talked a lot about that this morning as well. Some of these attitudes are changing and have changed based on the generational segmentation, based on your income and other things. But it's important to understand the attitudes of the general population against financial services, but it's also very, very important to understand your current customers' attitudes towards you. You know, what are they thinking about? What is important to them? Not only across all of it, but what is really important to your customers relating to financial services in general, as well as you specifically. Also, then, how are they behaving? So, are they actually behaving financially in your databases the way their attitudes are saying? Are they moving money from non-investments to investments, back and forth? What's happening? Who's leaving? Who's coming? And who's staying? So these two together have to be measured over and over again. Measurement, I'm going to talk a lot about, but measuring these, again, those metrics, remember, having strategic metrics that you can measure across time are becoming very, very important. That drives customer intelligence. Bringing these two together to actually have customer intelligence that you can relate and use and leverage into your tactics is really how I view taking research to better market products and services. So, attitudes. Here's a little quote from Abraham Lincoln. When I get ready to talk to people, it's more about what they are thinking versus what I want to say to them. So this kind of validates a lot what Larry was saying. You know, what are they thinking? What are their attitudes today? What are their attitudes towards my institution? So it's not necessarily how I think I want to talk to them, but what do they want to hear? It's being relevant. And Larry had that word too. I love that word, relevant, as from a marketing perspective, because when we are relevant, we win their business. So some sources: primary research, monitor, research studies on the consumer side, social sites, regulatory, and small business, a little different from the consumer business. Conditions of what's going on out there today, they're much more sensitive. At least that's what we see. Customer surveys. So now we're talking about, again, national research, but then what are your customers saying specifically? Reach out and ask them. Surveys today are very, very efficient. Who's doing a survey already on an ongoing basis, the bankers out there? Show of hands. Just a couple, okay. You know, you can be very effective and efficient in surveys, you know, even doing them once a year, help drive some of your strategic plans. But look at, you know, again, this relative importance. Not how important is this to you can really drive loyalty index. Look at the product demand. What share do you think you have? And what do they think you could actually get? And of course, their channel usage. You can get that from behaviors, but again, what's important to them and the availability of those channels. Kind of resources. But again, remember I said it's not just about the research. Larry's stuff is awesome, but taking that and now making it tactical, we got to drive it down and marry that somewhat with the behaviors. In order to do that, you really need a few different sources. One of them could be your core platform. And obviously that's very critical. Everything's going on in there, right? So you've got your core that can drive account and sub-account data, meaning transactional behavior information, account, those types of things. But a marketing data being off of that core can really launch you into these tactics very effectively and very efficiently. Recent accounts and transaction information, and of course trends. That's probably the biggest benefit, not only, but then you can also trend this information over time as you look at triggers, as you look at other behavioral trends on a household level basis, can be very, 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 very efficient for you. And of course, profitability. Now, I said before, you know, growing your institution just for growth's sake is no longer on the table. You have to look at how are we going to grow profitably. And look at honed profitability mechanisms within IF or market database becomes to understanding how you can grow profitably. And then geographic and demographic information. Let's augment your current household base with age, income, hello, income and other variables to drive you to a honed segmentation that really makes it tactical. Credit bureau information becomes yet another great behavioral source, and you're thinking, what do you mean behaviors? Well, as most of you know, the bureaus out there today are getting really good at understanding what our needs are, and that is giving for. Obviously, that is important for any risk managers out and managing and insight into your portfolio and your credit portfolio and looking at that, but also what's happening with them right now. Did they just run a credit bureau? Did somebody run a credit bureau on one of my customers last week? And are they in play right now? So why now they're looking at some credit? Because I just looked and, uh-oh, that's not with me. So looking at that kind of behavior becomes very, very important. If I have all of this information, some of the mechanisms that I use to consolidate some of this. And I said a marketing database. I'm going to just kind of paint this up. Just kind of a show of hands for the bankers. Who has a marketing database today? Okay, it looks like a lot of you do already. So I'm going to paint this really quickly, but certainly having a mechanism in place like an MCIF to consolidate this information makes it very tactical, but also gives you that business intelligence that drives some of that customer intelligence in order for you to leverage it. Because then when you have an MCIF, you have the ability to have a view into the data, you have the ability to do campaign management and specific mapping capabilities that most MCIFs, at least the good ones, have today that allow you to do that geospatial relations. So market behaviors. So if I want to really take in all of my research and start really understanding what are my opportunities in the market, not just with my customers, I need the ability to kind of take a look at the demand in the marketplace. Where are my branches today? And I've got my opportunities on my customers, but what's my household penetration? What's the convenience factor of my current customers and my targeted prospects about where I want to go? What's the demand in that marketplace by product? If you look at balanced demand, what are the deposits in my branch trade areas, and do I actually have an opportunity to garner deposits in a new territory or my current existing trade area? And then I say segment overlay here. I'm going to talk a little bit about segmentation, but it's really critical to start looking at segmentation in a way. I know, Larry, you had a great segmentation, and of course I have some of my own views of segmentation as well. And one of that is to really make it in a way that you can easily get a segmentation on a majority of your consumer and small business base on a regular basis. So make it actionable, and then overlay this in an ability to really get to market and really understand my penetration by segments. So but why segment? Because a lot of people out there kind of say, well, segmentation, you know, we do that. But you really kind of have to think about why would you do it, right? So to me, it brings the customer intelligence into tactical action, right? So it kind of hones all this down. Our data is very complex. It's funny, some like, when you look at Peppers and Rogers and some of those guys have been talking about the CRM and driving customer intelligence, and they've been talking about this for years. And most of them have badmouthed the financial services industry for about as long as they've been talking about it, because they said banks have had this plethora of intelligence for so long and are probably the last to the table to really leverage it in a way that can drive an ROI. But I think I think most are really making that turn now, because it's probably been pushed down our throats for so long. But with good segmentation, you start to understand the needs and behaviors of the consumer and be able to tactically take advantage of it. But here's that word, but take it and meet them in a relevant way, right? Because again, we say, if you knew that your customer needed a product right now while they were interacting with you, and that is what, although they didn't tell you, and you offered them that and it was the best offer, it's relevant to them and it makes sense, you're going to win the business 9 times out of 10. Obviously the hardest part is to be relevant at the right time, right? This is an example of Raddon's consumer segmentation scheme, and I know you guys have my bio, but I've been doing database marketing for a while, and have done it at some large financial institutions in Chicago. And many times what we would do, is we would look at a research project and/or look at a specific direct marketing program strategy, and we'd get the stats guys in the room, and they would look at doing a segmentation scheme based on kind of that program and that project. And it'd be great, but the problem with it is it'd be really hard to translate that, one, to the front line, for them to really understand it, because they're the ones who are going to be talking to the customers. And then if you do it on a project-by-project basis, you don't necessarily have trends over time and looking at your, let's just go with the consumer households for a moment. Because again, one of Larry's big value propositions is they've been doing this kind of research for 20 years. Ads like Raddon, as we look at this consumer segmentation scheme, we've had this in place, and that's why I like it. There's two main components to it. One, you can get an age and income on the majority of your consumer households right out of the gate. You guys probably have it. For those that raise their hand, you have a marketing database. My gut is that you have age and income probably on 98% if you do appends, right? And with that, we've kind of honed this, and we look at our primary research, as well as if you engage in customer direct research with us, and we look at actually doing this segmentation against that. So we know that over time, based on these segments, what's been the trend over a long period of time. And I know this is kind of an eye chart here, just kind of giving an example of if you look at like fee-driven, we've got an income definition, but we look at like 19% in the households in the nation are in that segment. Average age of 32 here, average age of 32 and annual income of 27,000. Just to give an example, we have national research that shows these segments, overlaying it against your customers and your consumers can really drive the tactics. Again, because it's easy to understand, you can translate that back to the front line. You can very easily communicate that to all of your stakeholders and over time see these trends. Also think about that from a small business perspective. Again, most of you will have an industry and a sales size on a lot of the small businesses, and in our small business national research, you can get this kind of segment and then go to market with that. So once you have kind of these ease of segments, you can start looking at product propensity. So when you have this product propensity, and Raddon, we have national research that looks at the product propensity, and then we can score your households that also look at this product propensity. And maybe you seem to think like this is fairly simplistic, that an upscale household has a higher propensity for trust and mutual funds. Yeah, that is fairly basic in premise, but again, if you have it scored in your database and you're able to tactically take advantage of that, that's where the advantage comes in. Because now you can easily translate that in a strategic plan and get to the data very easily. And if you think about the product segmented strategy here, if I look at my specific segments and break them into activity and relationship segments, you can start scoring balance indexes and delivery channel indexes to start to really understand and hone down what channel makes sense for me to market to them in. And have they higher propensity to use the ATM? They have a higher propensity to actually close their accounts with me based on their transaction behaviors. So now let me kind of recap for a second. We talked about the attitudes, national survey kind of research, what's going on in the marketplace, what's going on with your specific customers. Now we got behavioral data. So most of the time I think that's the challenge when I was doing it well in your shoes. That's a lot of the challenge I'd have. You have all of these different pieces. So how do I kind of bring it together to come up with my strategic plan, which is going to be to better market and more effectively market my products and services to my current customers and my targeted prospects in my market. So what do we have so far? Again, I said we've got the attitudes, behaviors, and market potential. And then always think about these from a segmentation. So if you have the same segments in all three of those components, you can start to overlay and understand, okay, I've got maybe I want to go after a fee-driven who are younger and are making less money because I see that's an opportunity both in my customer base, both in my market, right? So I've got some disparity. I've got a huge market potential there. And I know that based on that geodemographic, so again, I said, what am I supposed to do with it? Effectively go after the market. And so let's think about this now in terms of a program development. And instead of the 4 Ps, let's think of it now in terms of 4 Ms. It's kind of more of an emerging way to look at this. So my message, it has to be relevant, right? I want a relevant message as I go out to the market. I need to go multi-channel. You know, consumers today actually do still read the mail. That's what our survey said. Some of them really actually still read the mail. But they also go online a lot more, obviously. They're also going to social sites a lot more. So everybody's still doing what they used to do, but now there's other pieces that they're doing as well. And obviously we want to be relevant, but we got to measure it. So when we're thinking about program development and going to market our products and services, got to think about initially still saying, but how am I going to understand what the ROI of my program is? Because if I'm going and asking for $50,000 for my marketing program, I should be able to demonstrate at least understanding what I expect that ROI to be. So here's how I look at it. So you have your corporate strategy. I have where you need to align your marketing program with. But what are my current sales and service programs that are out there? How is my front line actually delivering some of my message today? What's going out there? What is the culture? What am I dealing with as a marketing vice president in my institution to understand all of this and marry that together with what I have just found? So it's really driving that business intelligence. Now I've got my driving key findings out of that business intelligence by segments. So I'm taking my research, driving it into business intelligence, and understanding what are my key findings out of that. And what do I do with that? Then I can drive my strategic recommendations. What's an example of a strategic? One of the segments, my middle class segment, my middle income segment. In these specific branches that I have, I see that we have a tremendous opportunity because this segment that I have today is one of my most profitable segments. And as I look at the marketplace, I see that that middle income segment, I'm only in a penetration of about 20%. And I think with the brand equity that we have within this branch trade area today, that we could win a bigger share of that market. So we're going to go after that strong in those trade areas. It's the ability to marry some of those key findings in with that program strategic recommendations. And once I have that, then come up with the plan using those 4 M's that I just spoke about. So how do you optimize a message? So how do you make the message relevant? Well, it's really, some of it is really talking about looking at the segmentation again, but when you start marrying profit potential, again, it's not necessarily just about their age and income, but what is their profit potential and how is their loyalty today? And what I'm demonstrating here is you have a lot of opportunity to move the relationships that have low loyalty but high profit potential over to a high loyalty based on a lot of your messaging. And taking and marrying some of that business intelligence into this kind of a matrix can really optimize your message. In the multi-channel environment, let's take a look at really what do you want to do? What are some of the major components here? Now, a lot of you may be thinking about some of the social sites and going out. Who has a Facebook page for your institution? Okay, some, not a lot. You know, the jury's out. You know, what are you going to do with that? Is it going to really drive revenue? Are you doing it just to be out there? Jury's still out, I would say. But I'd say these 3 channels, when you go multi-channel, these are the 3 you should be thinking about. Direct mail can still work in a low-cost environment. Getting it out the door cost effectively. There people still are reading the mail. Complementing that with email makes a lot of sense. Again, it's very, very cost effective. But then online banking is another big trend. There are capabilities out there where you can actually drive some one-to-one messaging within a post-authenticated online banking session. And we're seeing a lot of institutions do really, really well with that. Again, it's all about, can you drive responses in a cost-effective way to deliver it? And then, of course, lead presentment to the front line. Kind of sorry, I've got one of my brands up there, but it's what I know. But getting your actual marketing messages out to the front line while they're interacting with your clients and your customers can really drive an ROI as well. So it's a complement. If they're coming in, now most of the time when I ask, and this doesn't have the banker, so raise your hand if you actually physically, not to go to work, but physically visited a branch to make a transaction in the last month? A show of hands. Okay, and it's usually about that. It's usually about 50%. Because remember about 10 years ago, we all thought brick and mortar is going away. We're not going to be building branches anymore. But still today, okay, 50% in the last month still went to a branch. It can really help your marketing programs when they're able to efficiently and effectively understand what the relevant message is when they come in an effective way. What should I offer this customer when they come in? And having the customer intelligence that you now have based on all of those sources and driving that out to the front line can make a huge impact on your marketing programs. And then managing those from a sales management perspective can also really help you drive effectiveness. And so what happens in this case, you actually get dispositions and sales activity. Why not, as the marketers, you guys in the room, get what happened with those interactions back in your marketing database, so now you've got even more research. Now you even have a better idea of your marketing program and what's happening in the branches to help you drive what you do in the next campaign. Always look to enhance what you got going on. A moment of relevance. Obviously, our objective is to get the customer to say, that's exactly what I was looking for. How did you know? So how do we get there? Again, I just said, within the channel, if we know, based on this customer intelligence, that we get that good at understanding the consumer segment and small business segmentation, driving with what we already understand based on their product demand, based on our brand equity in the market, what is our message that we're going to say? And we can optimize that and get them to this point. And the measurability, this is the old standard, don't do it if you can't measure it. And I think it stands to reason today. There are obviously still some things, it's really hard to measure your branding strategy in the marketplace. There are ways to do it. It's hard. But your advertising, you can get it done by looking at baselines, and when you go out with it, are you actually driving and getting it out of your baseline? And that is still all about having that research, having that data, and understanding if you've got lift or not when you go out to market. Multiple levels of response. I think we all overlook this sometimes, and as you put your strategic plans together, most of us would say, I went out with my program and I had this many open up an account. That's good, but why not go down deeper as you get into multi-channel? Let's say you're getting into online banking and somebody clicked on a banner but nothing happened. That's a response. You get, part of your response analysis as you guys go back to understand the ROI, you have an engagement now with that customer that you didn't have before. So measure that. If you get it to the front line, measure that the front line actually asked them this offer. How many times did you present it to that customer And if they didn't respond, or if they did respond and didn't open the account, understand all these measures of response, because it's going to help you drive better strategy and better tactics down the road. But always thinking in terms of return on investment. I've also seen where you can actually get this multi-level of response and start to understand, even in the online space, what is my cost to actually get them to click on a banner even though they didn't open that account, because now I've got an engagement that's higher than I did before. And pretty easy to prove that when you have that, that's like a very inexpensive lead generation tool for some of your sales staff. You can capture that, send that back to them, they've raised their hand. So I like to think of the tactical execution in these kind of 4 buckets. Because we kind of laid, I think, the groundwork here a little bit for getting us to this point of actually getting to market. So we've got our research. So we've got this research bucket, we've got business intelligence that we can kind of put all together to create this strategic plan. But it's always good, and you always want to do, is you should test. Don't invest heavily, and you'll see this, until you get some inkling of what, if you can test, you got to test this a little bit, especially in the multi-channel. If you can go out in email, if you can go out to online banking, if you can go out to frontline and just do 1 or 2 branches, do it before you go out to everybody. It can lend credibility to your program, and actually can lend credibility to you, because if you don't get what you think you were going to get, you can modify that plan before you actually go out, because you can refine it. So why not have all the data, test it, then refine your tactics, actually invest in the program. So research, test, and invest. Make sense? Some people. So this is kind of the flow of customer intelligence that I talk a lot about in Raddon, and it's really linking your core system to some of the channels here. So if your core is feeding into your MCIF, you know, your MCIF can certainly go out to other channels outside of, you know, this is direct mail and email, that's kind of a no-brainer. But think about the lead presentment in all these different channels. But once you get from a marketer's perspective, you know, you can actually push some of these leads out to the front line, but then managing these leads and being a partner with your branch sales staff is really critical. I'd run a trigger-based marketing program for LaSalle Bank in Chicago for a while, and it was one of the first times we actually really had an awesome partnership between marketing and the branch sales staff. And a program really propelled us to a new level of understanding and really generated a high ROI for this program, because we both together went and presented to the branches and the division managers of the branches and said, this is a program together that we believe in, and marketing can deliver the best leads possible, but the branches still have to act on those. Because if they don't act on those leads and do something with them, then it doesn't really, you could give them the best leads. I mean, all they had to do is ask, but if they don't ask, it's not going to happen. So understanding that lead management aspect and that partnership, but like I had said before, getting some of that data back into your MCIF in order to leverage that for business intelligence to find programs. And going to throw some of the brands that Raddon has that kind of overlay some of this, as we have Integrator as our MCIF and Lead Builder and Activity Manager, and are able to go to the online banking as well through a partner with Deep Target, and actually presenting online banking one-to-one banners based on MCIF business and customer intelligence. So thank you very much. And again, I have a booth here, and I have some brochures and some of the offers. If you'd like to stop by, please do. And look forward to speaking with you more throughout the day.
We hope you enjoyed this presentation from the New Jersey Bank Marketing Association. For more information, visit njbankmarketing.com. We produce these programs in the studios of Professional Podcasts in Cherry Hill, New Jersey. On the web at professionalpodcasts.com. This is Steve Lubetkin. Thank you for joining us, and we'll see you out there on the net. Take good care.